Hey everyone, welcome back to Corporate Decoder, the place where we uncover the real stories behind the spreadsheets and legal jargon to see if this company is steering the ship or taking on water. Today we are diving into a company that seems to be making some strategic moves, Genco Shipping and Trading Limited. Now this filing isn't your typical deep dive financial report like a 10Q or 10K, but it tells us about an important change. Think of it as a company announcing a new rule for its playground that could affect who gets to play and how. We're talking about an amendment to their shareholder rights agreement. This is crucial because it directly impacts how potential takeovers or significant stake building are handled. Make sure you are subscribed and join our Discord community linked in the description below, where we discuss these insights further and break down more filings. So what exactly happened on the 10th of November 2025? Genco entered into a first amendment to their shareholder rights agreement. This agreement, originally put in place on the 1st of October 2025 with Computershare Incorporated, has now been tweaked. The main goal of these rights plans, and this amendment follows that trend, is to protect existing shareholders from having someone swoop in and take control of the company without offering a fair price to everyone. It gives the board time to figure out the best course of action for all shareholders. The big change here is how they've redefined who counts as an acquiring person. Previously, the threshold might have been different, but now, if someone acquires 10% of the company's stock, they become an acquiring person. This triggers the rights plan, essentially making it more expensive for that person to buy more shares, giving the company time to react. There is a special rule for what they call a 13G investor, which bumps that threshold up to 15%. This is for investors who hold stakes, but typically declare they do not intend to take control. Now, here is where it gets interesting. They've created an exemption for a grandfathered shareholder. This shareholder, Diana Shipping Incorporated, currently holds almost 15% of Genco's common stock. This exemption is important because it allows Diana Shipping to keep its existing stake without immediately triggering the new rules. However, this exemption isn't permanent. If Diana Shipping's ownership goes above 15%, or if it drops below its current percentage and then buys shares again to get back to 10% or more, it loses its special grandfathered status. It looks like they are trying to grandfather in an existing large shareholder while tightening rules for new potential acquirers. Let's unpack that 13G investor bit a little more. Basically, these are investors who file a specific type of document, Schedule 13G, with the Securities and Exchange Commission. This filing generally means they are passive investors, meaning they only plan to vote their shares and don't intend to take control of the company. So, for these specific investors, the trigger point to becoming an acquiring person and activating the rights plan is higher, at 15% instead of 10%. But even for them, there is a catch. If they ever file a different document, Schedule 13D, that suggests they do have plans to seek control. Or if their filings become inconsistent with the passive investor declaration, they immediately lose their 13G status and could fall under the 10% trigger if they own that much or more. Why make these changes? The company states that the board believes this amendment is in the best interest of shareholders. The reason cited for this move is the rapid accumulation of the company's common stock by a competitor. This suggests that the company may have been feeling pressure from a rival entity building a significant stake by lowering the acquisition threshold. Genco is essentially putting up a stronger defense against a potential hostile takeover bid from this competitor. They want to make sure that any attempt to gain control is done fairly and with the full consideration of all shareholders. This amendment is designed to give the board more breathing room to negotiate and ensure shareholders get a fair deal if someone tries to gain control. Now, Genco Shipping and Trading Limited, ticker symbol GNK, is traded on the New York Stock Exchange. It is important to note that they have both common stock and what are called preferred stock purchase rights registered. These rights are often part of a shareholder rights plan, sometimes referred to as a poison pill, designed to dilute the stake of any unwelcome acquirer. This amendment is essentially modifying how that poison pill works. This amendment is a pretty significant change to the rights of security holders, as it directly impacts how much stock someone can buy before triggering defensive measures. It is not usually something companies do without a reason, and in this case, that reason appears to be a perceived threat from a competitor accumulating shares. This can be a sign of an underlying shift in the company's strategic landscape, or a direct response to activist investor pressure. The actual document detailing this amendment is Exhibit 4.1. While we don't have time to go through every legal word here, the core message is clear. Genco is beefing up its defenses against a potential takeover, and it is doing so by lowering the threshold for trigger events. This report is signed off by Peter Allen, the Chief Financial Officer. This indicates that the financial and legal teams have reviewed this change and are comfortable with its implications. So, what is the big picture here? Genco Shipping and Trading Limited is proactively strengthening its defenses. They've identified a potential threat, likely a competitor, accumulating their stock. By amending their shareholder rights agreement, they've made it harder and more costly for someone to gain a controlling stake without proper negotiation and a fair offer to all shareholders. The exemption for Diana Shipping Incorporated shows they understand they have a large existing shareholder and are trying to balance their defense strategy with existing relationships. From a strategic standpoint, this move signals that Genco wants to maintain its independence and ensure any changes in ownership are mutually beneficial and orderly. It is a move that can be seen as both protective and potentially a sign of underlying confidence in their own long-term strategy, or perhaps a signal that they believe their stock is currently undervalued, making it an attractive target. The risk here is that such defensive tactics can sometimes be perceived negatively by the market, potentially discouraging legitimate investment. However, given the explicit mention of a competitor's rapid accumulation, this seems like a calculated move to prevent a potentially harmful takeover. Overall, Genco appears to be navigating a potentially challenging period by reinforcing its corporate governance structure. Whether this action will play out positively or negatively for shareholders will depend on the future actions of the company and any interested parties. Alright, that is our breakdown of Genco Shipping and Trading Limited's latest filing. What is your take on these moves and what they signal for the company's future? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching, see you next time.